Hello, good evening, guys. Uh, Last day I have already spoken regarding the principle or doctrine in accounting. We generally practice those principles while accounting is done in the books of enterprise. Now, for rewinding consistency, doctrine of or principle of consistency, that means from year to year, while recording the transaction in the books of accounts, consistency should be there. That means whatever you are assuming on the basis, on the emphasis of the accounting, that to be consistent from year to year. Obviously, I have spoken regarding the vertical, horizontal and three-dimensional consistency. After that, disclosure. Disclosure of what? Disclosure of the fact. That to be again should be there while accounting practice has been done. Next is conservation. Conservatism means we should be conservative enough while doing accounting. For example, last day also given, today once more time. Conservation means our principle of accounting or doctrine to be conserved. Next is materiality. Materiality under this material fact while doing accounting, that to be disclosed, although not in your statement, final statement of account on computation of profit loss or statement, position statement, but there should be a note. So going little bit detail in ahead, apart from doctrine or principle of accounting, we have different concept which we apply, and those concept knowledge should be there. Without proper knowledge of those concepts, accounting become difficult. So going further chapter wise of your syllabus, what I am trying to understand, make you understand that you must adhere to the rules, adhere to the basic concept. Suppose I want to keep books on something, table should be there, or there should be a shelf, otherwise you cannot keep books. You want to write something, so desk should be there, you keep your paper on decks, then you start writing. So sorry, these are the concepts should be clear to you. First concept is the I say separate entity concept. What is separate entity concept? While doing accountings, and in an enterprise book, the proprietor or owner of the enterprise should be treated outsider. So your business, you are outsider. Your business distinct from you. For example, I want to compute the profit loss of your enterprise. Until unless myself I separate from my transactions, truly speaking, transaction means those events are expressed in monetary terms. So until myself I distinct my transaction from the business book, original or the actual profit loss or actual position in the year end, that cannot be computed. So separate entity concept is the very basic concept which we must know. Business is separated, so transaction in the books of account to be recorded separately in the books of enterprise. My transaction with the business again to be recorded in the business book, I say now, by means of drawing. And in my books also I write separately. So my accounting books is different from that of my enterprise books of account. Now I'll discuss later on books of accounts, what constitute the books of accounts. Now say next concept I am coming into, going concern concept. Next I say the cost concept, because going concern concept is somewhat related little bit with your cost concept. Now cost concept means actual cost you incur in purchasing your store, that is stock in trade, or purchasing of raw material, that to be written. For example, I purchase goods from a market, and paying to the seller of the goods or seller of my raw material, which I will convert into finished good, then again I will sell it for rupees 20,000 say. So after I bought it into my enterprise, say by the time I start my production, price has inflated by 10%. So 20,000 into 10%, 2,000. So my goods cost 20,000 to me, but realization price of the market value becomes your 22,000. So while putting the goods into production, so I must record as 20,000 as well as charge production cost with 20,000 for raw material, not with the 22,000. That means whatever cost you have incurred, that to be again considered. The cost to you is 20,000. Market price may go up or comes down. That is none of our business, or none of the enterprise business or accounting is not bothered about that. Actual the invoice price that going to be paid by the enterprise, that to be recorded. For example, I purchased one plant machinery today from a seller on tender. Now, when I bought the plant machinery into my plant, I installed. So, plant cost is 50,000, carriage and installation cost is 10,000. So, machinery before we put in use, in my books it should be 50 plus 10, 60,000. Now, it might be the seller in need of cash has sold you the asset at lower price. Market value is 70 or 80,000. We should never record as 70 or 80,000. Instead, we will record on the basis of our cost incurred to put the machinery into use. Okay, next concept. Separate entity concept, cost concept, then say duality concept. Now, what is duality concept? In duality concept, every transaction, now what is transaction? Event. Any happening is an event. So, happening within the enterprise or outside enterprise, where the enterprise is related, is an event for the enterprise. But we should never record those events in the books of accounts. You may keep notes separately. Now, when an event is expressed in monetary term or pecuniary term, then only it is recorded. Now, what is monetary term? For example, I expended, or our enterprise expended certain cost or certain money value behind an events, then only recorded in the books of accounts. That is your duality that is your transaction, and it should be recorded in the books of account on duality basis. Duality basis means one transaction have two effect. One aspect is so enterprise side, another aspect is with the other party. For example, I purchase goods. So one account is my goods account. Initially I am speaking goods account, or say purchase account. More clearly purchase account. So one aspect is purchase account, another aspect is in cash, if you have paid in cash. So it is recorded on duality aspect, that is one record to be made in the purchase account, another record to be made in your cash account. If you have not paid then and then another aspect to be recorded in the supplier books. Supplier book also maintained by us. Like to whom I sell, his account also maintained by us. So buyer of my goods become my customer. So customer account maintained as well as supplier account. For each entity we have the one account, or each heads we have one account. So every transaction to be recorded on dual aspect. Now let us go into the next concept. Say matching concept. Now what is matching concept? Under matching concept, we say I want to compute my uh, result, enterprise result for whole period. Now, expenditure actually I have incurred, which may for again in advance period also. So, actual cash expenditure is more, and benefit to be arise in the next accounting periods. In that case, whatever the expenditure only related to this period, that to be charged. Similarly, income which is earned in this period, but income to be received later on, income is earned on the basis of shipment of goods or on the basis of invoice raise, whichever is later. Whichever is later. That means today I raise the invoice and I am shipping the goods after 7 days. So after 7 days only it is to be treated as sales. So this is the matching concept, means actual income and the actual expenditure for that period, that to be matched to obtain the actual profit or loss or actual net surplus your enterprise which has earned for that period. That is your matching concept. We should not try to put actual expenditure. We should never inflate in the books, or actual income should not be suppressed or should not even be inflated. So that means under matching concept we must match our income and expenditure properly, which relate only to this period. So I have spoken already going concern concept, separating concept, separate entity concept, going concern concept, cost concept. After cost concept we say the going concern. Now what is going concern concept? So my enterprise will run year after year. If I die, my successor is there, he or she will carry out my business. So business, once it is open, it is not closed down until unless the proprietor of the business willing to close down. So accountant is not bothered about total business value is this, or so I should write in books of accounts the position statement business value this, there is plant machinery market value this, raw material market value this, finished good market value this. Accountant should not write. Why he should not? Because under cost concept, whatever cost is incurred, that to be recorded, and under going concern concept, it is assumed our enterprise will run or will work for further and further period until it is closed down. So only on closed down we can say the realization amount, and then only the profit loss to be calculated depending upon the my realization price as well as my cost price. So under going concern concept, business will continue until unless it is pulled down by the either operation of law or pulled down by the willingness of the proprietor. So this is your going concern concept. So very example is company. In case of company, once it is started by the operation of law. So company birth is by operation of law. So company will die or close down or liquidates only by the operation of law. Members or owners of the company, they comes and they pass out, they die, new member join, member sell their ownership to other party. So new member purchase or new proprietor purchase the company. So company continues. So going concern concept, I think it is clear. Owner, members, investors, they may die personally, but company will not die. Or we say new member join. So year after year, company will continue. It can liquidate, it can end up only by the operation of law. So we have I have spoken already, separate entity concept, cost concept, matching concept in accounting, then going concern concept, then we have the pecuniary concept. That means transaction to be recorded only in monetary terms. That is amount to be mentioned. That is pecuniary concept. Matching principle. So all these concepts should be very clear before we go in detail in the accounting. So these are the theoretical portion of your syllabus. So I am talking regarding the ISC final examination syllabus 2022. So first 20 marks which is coming, which is based on only theoretical of your entire syllabus, theoretical part of it, when you are given the small questions and every small question carry out certain marks. There is no escape. You cannot like skip certain question. If you skip question means you are skipping your marks. So those 20 marks, if you want to answer fully, so you have to read the all like concept or doctrine or principle of accounting, as well as the in every chapter you have certain portion of theoretical part which you must know, because accounting is a theory, accounting is a science, accounting is a technique, accounting is an art, accounting is a science also. So before going details into chapter wise, all this you should know, as well as I have already spoken like generally accepted accounting policy, that is GAAP, and international standard, those to be accounting standard, those to be also read by students very well, because those also your part of your syllabus and those are also theoretical based. Apart from this, computerized accounting as well as manual accounting, under computer accounting ready-made packages, those packages knowledge you student must have, as well as the tailor-made, that is when our enterprise giving order to some software company to develop certain software to record our transaction, that also to be studied by you. So okay guys, next time I am coming with like what is the accounts, what are the books we use in the process of accounting, and how we record the transaction and classes of accounts. I'll speak everything to you. If you follow my videos, put a like if you like my videos, and you can watch my video for developing your knowledge. Okay guys, thank you. See you next time. Thank you.